Good day to all of you and welcome to this session on national income and national income aggregates. This is what I am going to talk to you today, and I am Dr. Christina D'Souza from Government College, Khandola. National income and national income aggregates comes into the paper of macroeconomics. This module, as I told you, will talk about and explain what is the meaning of national income and its aggregates. Once you have learned this module, you will be able to understand the meaning of national income, and you will also be able to explain the aggregates of national income. Let us now come to the meaning of national income. National income includes the value of all goods and services that are produced during the financial year. Please remember that it is the final goods and services that are produced during the financial year. I am stressing on the word final goods and services. This is because intermediate goods are not included while accounting for the national income of the country. Intermediate goods are those goods that are used in the production of the final goods and services. Okay. So, intermediate good, like for example wood, that would be used in producing furniture. So, when we account for the national income, we will take into consideration furniture like table, chairs, cupboards, beds, etc., and we will not include the value of wood while calculating national income for this furniture. So, please remember that intermediate goods will not be considered while calculating national income of the country, because this would lead to double counting. We would account for the value of intermediate goods as well as final goods. So, that will not give us the right estimate of national income. So, please remember students, when we talk about national income, it is the final goods and services that are produced during the year in monetary terms that is included in national income. So, national income, as I was telling you, is only the final goods and services that are produced during the financial year that will be accounted for. Example of these goods would be, say, agricultural goods like tomatoes, potatoes, onions and so on. But if tomatoes are used to produce tomato ketchup, then these tomatoes would not be included as a value of in national income, because they are the intermediate goods. Only tomato ketchup would be included as the value of the final good. Why do we need to study national income? We need to study national income for various reasons, and it is important to study national income because it enables us to understand whether economic growth of the country is increasing or decreasing. If national income increases, economic growth increases. If national income decreases, economic growth decreases. What is the composition of this national income? Are we producing more of industrial goods and less of agricultural goods, or are we producing less of essential commodities and more of luxury commodities, is what we will understand when we study national income. So, national income, if the output of these goods and services, say, is more of luxury goods and less of essential commodities, then we are going to have problems in the economy, because there will be scarcity of essential commodities and therefore, there will be inflation in the country. So, it is important to study the composition of national income to know what kind of goods and services are being produced, so that we do not have economic problems or our economic problems are reduced. What is the distribution of national income? Whether there are inequalities in the distribution of national income, like for example, if profits are higher and wages are low, then there is going to be inequitable distribution of national income, and there is going to be a lot of social unrest in the economy. This creates a number of economic problems, such as crimes would increase in the economy. The large majority of people would not be happy because their incomes are very low. So, do we have an equitable distribution of national income or unequal distribution of national income? We will realize when we study and analyze national income of the country. And accordingly, economic policies can be formulated by the government in order to take care of all these economic problems. Okay? So, through fiscal and monetary policy, for example, boost can be given to the production of essential commodities, agricultural commodities, so that the problem of inflation is reduced in the economy. Now, let us move on to the aggregates of national income. There are 4 important aggregates of national income, namely gross domestic product, net domestic product, gross national product and net national product. What is gross domestic product? It is the total value of goods and services, once again final goods and services that are produced in the economy, but within the boundaries of the economy. So, whatever goods and services are produced within the boundaries of the economy will be included in the gross domestic product. Now, who produces these goods and services within the economy? They would be domestic producers, Indian producers who would be producing goods and services, and we also have foreign investors in the economy, foreign companies in the country that are producing goods and services in the economy. Okay. Therefore, gross domestic product would include the goods and services produced by Indian industries as well as the goods and services produced by foreign industries in the economy. So, whatever is produced within the boundaries of the economy is included in the gross domestic product. Now, what is the significance of gross domestic product? Why do we need to know GDP of the nation? Because GDP reflects the economic production in the country as well as the growth rate of the economy. GDP is high, naturally growth rate of the economy will be high. It also indicates whether the economy is on the path of economic progress or whether we are going into a recession. Okay? And accordingly, measures can be undertaken, policies can be undertaken by the government, formulated by the government, implemented by the government. These economic policies will therefore help to reduce these problems of low growth rates or a recession in the economy. Usually, GDP is calculated by adding consumption expenditure, business investment expenditure, government expenditure and net exports. Now, net exports are total exports minus imports. So, if all these are added together, we get the GDP of the country. GDP of the country is revealed every quarterly. Okay? So, every 3 months we know what is the GDP of the nation, which is revealed by the CSO, that is the Central Statistics Office. Now, we go on to the next aggregate of national income, that is net domestic product. Now, in the production of these goods and services, there is a lot of tear and wear of machinery. Okay? So, wear and tear of machinery takes place while producing these goods and services. So, there is a certain depreciation of machinery, there is a depletion of this capital stock. Now, if the depreciation is subtracted from the GDP, we obtain the NDP of the nation. So, net domestic product is calculated by subtracting depreciation from GDP. So, depreciation, as you know, is the loss of the value of an asset. Like for example, if you purchase a car today and want to sell it after 10 years, the value is not going to remain the same. There has been some depreciation of the vehicle. So, the decrease in the value of the asset is known as depreciation. So, if this depreciation of capital stock is subtracted from GDP, we obtain the NDP of the country. Gross national product is another aggregate of national income. Gross national product is the total value of final goods and services produced now by the citizens of the country irrespective of their location. What does that mean? It means that they are the goods and services that are produced within the country and beyond the boundaries of the country, but by the citizens of the nation, not by foreign companies or foreign investors. If GNP is greater than GDP, it means that the population of the country has a greater total income. Now, GDP therefore signifies how people contribute to the economy, how domestic producers contribute to the economy irrespective of the location of their ownership. That means, they could be producing goods and services within the country as well as abroad. Okay, even though goods and services produced abroad by the domestic producers would be included in the GNP of the country. Like for example, Tata's, Infosys, they invest in the country as well as they have investments abroad. So, their investments abroad, okay, the production abroad, the income that they earn will also be included in the GNP of the nation. So, GNP does not take into account, please remember, does not take into account the income earned by foreign residents or business enterprises in India, and it excludes the goods and services manufactured by foreign companies in the country. So, what GNP includes is only what domestic producers produce within the country or beyond the boundaries of the nation. GNP is calculated with GDP plus net factor income from abroad. Net factor income from abroad implies what the domestic residents earn from overseas investments minus the net income earned by foreign residents from domestic investments. Okay. So, what the domestic residents earn from overseas investments, but it does not consider or it minuses the income earned by foreign residents from domestic investments. Okay. So, if you have Ford producing goods and services in the economy, it is not included in the GNP of the nation. The net national product is GNP minus depreciation. So, when we subtract depreciation from GNP, we get the net national product. So, to summarize this module, what we have learned today is the meaning of national income and related aggregates, namely gross domestic product, net domestic product, gross national product and net national product. I hope you have understood this session, and I hope you will remember whatever I have explained to you. These are your references, and thank you very much.